You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Hello and welcome to Talking Real Money. I'm Don. That's Tom. We're just going to start like it's all new. We're going to start all over again.
Everyone needs a fresh start from time to time.
And we are here to help you get that fresh financial start, just like we are starting the show fresh, because we had technical difficulties. I don't know what kind of technical difficulties, but for some reason, everything shut down. Everything just shut down. It was the weirdest thing. Tom was disconnected. I was the station was disconnected. We all disconnected. So now we're back together again.
It's a COVID issue.
Yeah, the internet caught a cold. Actually, we could probably blame COVID because everybody and their brother is on the internet all over the country doing pretty much everything on the internet. Everything. Watching TV on the internet, doing concerts on the internet. Yeah, we all do internet stuff these days. And we are here to actually not do internet with you, well, unless you're listening to the podcast, where we're going to help you manage money issues, how you buy investments, how you sell them, how you create income from them, how you can retire more comfortably, how you avoid getting ripped off, how you keep from getting caught up in some of the stupidity. We are going to talk a lot about some of that stupidity today. You can call with your questions to 855-935-TALK, 855-935-8255 anytime.
Big birthday this weekend, too.
Happy birthday to you, Warren Buffett.
The Oracle of Omaha turning 90 years young. I mean, he is kind of young still. He's still working. He's eating ice cream every day, hanging out with his grandkids, I think, when I see that. So at any rate, Warren, of course, known as the greatest investor of the, I guess, 20th and 21st century now, right? I mean, you have to throw him in this one, too,
please, really?
All right, never mind.
Really?
No, but
wait. No, I must speak up. Warren Buffett, this is a point I'd really like to make before you go on to your other stuff. The greatest investor? Come on. How did he get this reputation when the guy really is, here's what Warren Buffett is. He was a great acquirer and manager of businesses. He wasn't
Isn't
like
that
a
what you do as a stock investor?
No, I don't.
Oh, okay, you're not running Apple, or
no, I don't.
Responsible for
Tim
Hertz,
Cook will not let me run the place. He knows better. Even Elon Musk, who really doesn't know better, doesn't let me run his place. It's really doing a disservice to both Buffett and to investing to say he's this great, brilliant oracle. It almost makes people think that there is somebody out there who can pick great stocks. No, he picks good companies to buy and then make better through his efforts or his people's efforts.
And he holds them for a long time as well. By the way, the more recently, I do believe I read something that said if you just owned U.S. large value companies in an index, you did better than Warren over a fairly long period of time. And that's what he's been, a value investor. We can spend more time on that. But what he's done, Don, is, number one, he does invest.
Right.
A lot of people don't.
Okay.
They don't save anything. They don't send anything aside.
All right. Okay, we can call him an investor from that perspective.
He's an investor. And the other thing is he holds things for a long time.
And runs them.
Well, okay, we'll give him credit for that. But here, listen to this number. The typical investor that owns Apple holds the company for less than 25 weeks.
Oh, you're kidding. Seriously?
No, right.
Oh, well, that's just dumb. You guys are dumb.
Warren didn't really want to be an Apple investor, but one of his lieutenants said, hey, we really should own this company's doing pretty well. Apparently, they got phones and stuff that work and computers that are operating. And now they got their own TV channel that's pretty good that I like. But they bought it and they held it and it's worked. So the power of compounding.
Yes.
Right?
Okay.
things.
I will give him
building.
that lesson. That is a valuable lesson.
It's because time, people forget about time when it comes to investing. Here's a couple of the numbers from this article I find fascinating. Should my daughter live to the year 2100, which I think is a possibility, born in 2008.
That would make her 92.
So imagine, her dad would have been born in the mid-20th century. She'd be alive in the 20s. Anyway, it's kind of a weird thing to think about. But if the Dow Jones, which I know you hate and we'll talk about later, for good reasons, by the way.
You're putting me in a bad mood.
If it compounds at about 8% a year, you know what the Dow will be by the year 2100?
Non-existent.
I knew that was coming.
That's my wish.
The Dow today trading at 10,546,398 and 52 cents.
All right.
Some poor announcer is going to have to really work hard in the year 2100. And that's if it just sort of compounds at as I say, less than it's compounded at for the last 30 years.
Can I just say,
the lesson from
can
Buffett,
I be grumpy again?
Apparently you're going to, whether I
The
say it or
Dow is so stupid. Why, media people? And I'm speaking to you at Como too. Why doesn't someone have the courage to say, we are going to stand up to Dow Jones and Company and stop quoting the stupid 30 stock Dow Jones Industrial Average, which isn't even an index. It's just adding up the prices of the stock and dividing them.
Yeah, it's kind of a silly, but you're stealing the thunder from next hour. That was supposed to be our top story next hour.
Well, you mentioned it.
This hour we're supposed to go to the buffet and feed up on all those great value stocks that Warren has bought for so very long and held. And by the way, please don't write me, because somebody just did last week.
Yes.
And said, well, how can this market be going up because the economy's not doing well? And they always put this in there. And Warren Buffett is on the sidelines.
Actually, there was a whole bunch of stuff in that previous thought of yours to unpack, even more than that. You forgot the whole value. We've heard from people saying value stinks.
You're going to steal all our stuff from a long time. If you
but we're going to get all the calls in the next hour anyway, so it won't matter. Okay. That's the way it always happens.
Indeed, it does.
We whine for a little while.
I thought we were the wailing guys. We're the whining guys.
We're the wailing. We're wailing and whining. Wailing and whining. It sounds like a country western band. Hey, I'm wailing. He's whining.
Well, we could get Como to change their format.
Excuse me.
We got some people that could play there.
Choked myself up.
Warren Buffett, here's what you should learn. And by the way, another lesson to learn from Warren is he would tell you, just go buy an index fund. He wouldn't even tell you to buy Berkshire Hathaway because he's admitted we had a great run. We're huge. It's going to be hard to maintain and beat an index fund over time.
And, dude, I'm 90. You think I'm still working at the same level I was at 80?
Exactly. That's not going to happen. So, again, yes, save something. Yes, invest something. No, I mean,
I'm so glad there's a moral here.
Well, I'm trying to get to a point because you are wandering around more than a meandering river right now. So compounding is important. Wailing and whining show. Wait. Would you like some cheese with that wine, sir?
Wailing and whining.
I'm gonna leave you hanging on that one. I gotta go get my organ in here and play that or something. So anyway,
please don't touch your organ.
Exactly.
Stay away from your organ. Don't touch it. Just lost Tom. And it wasn't his internet either. He just fell down.
Save something. Get the compounding. Don't pick individual stocks. Don't time the market. I don't know. What else can we say for Warren? Have ice cream every day and love your grandkids.
And
those things all worked out too.
And wish him a happy birthday.
Yeah. I mean, he did okay for himself.
And we can't even go to the buffet now because you can't have a buffet.
I bet
Golden Corral is doing badly.
I drove by a huge car show last night and all these hundreds of people standing right next to each other, not one mask.
Sounds kind of like the Republican National Convention.
2,000 people on the South Lawn without a mask.
Yeah.
Don't they have a guy that's saying, where's your mask? I don't know. So, anyway.
They could have stopped at the Walgreens down the block and bought a couple hundred boxes of them. And
it's right next to the House chamber there.
Here you go.
One of those. Save something. Get compounding. Don't pick individual stocks. Don't time markets and use index funds. How's that?
Gosh, that was profound, Thomas.
You like that? Well,
Yeah.
I'm stealing it from Warren Buffett.
That was really something.
And
Something.
the Dow Jones Industrial Average is silly and stupid index because you put that in there.
Well, I had to.
And
You
it is.
mentioned it. It's stupid.
We'll
But
talk about the difference between that and the S&P 500.
But
for
you
example,
also
soon.
mentioned the fact, though, and by the way, this you have in your first hour. You mentioned the fact that Warren Buffett
Yes.
buys value stocks, the assets of
Yeah.
undervalued companies. Now, what's been the state? And we hear this a lot. Value stocks just aren't doing very well. Why are we in these stupid value stocks when the growth stocks are doing better and, the whole market's doing better than those dumb value stocks? They worked for Warren. Did they stop working? Are they just done forever?
Well, they haven't stopped working. They just haven't done as well as growth stocks. See,
Look
this is
at
people always
you.
think it's one or the other. Like that one working, that one not. Well, it's not that simple, right? And we've told you this for years, you should own both.
And value stocks, interestingly enough, have done in the last decade just what they did in the decade before when they had a wonderful run. The reason growth stocks look like they're doing better is because growth stocks, the ones with growing earnings, have done so much better in the past decade than they used to do.
16% compared to 9%.
16, as Tom said,
Annually.
16% compared to 9% annually. I have to translate robot.
Well, my daughter is in a robotics class. So, not at this moment, hopefully. No, so, yeah, that's a great takeaway, by the way, value versus growth. You should own both, right?
And
That's all we know.
well, no, but what we do also are what we believe, and it's the stuff we know. We can only know what has gone before today. We cannot know what will come tomorrow. We can only know what has happened. And we do know, looking back 90 odd years, that over every 20-year period, value stocks have outperformed growth stocks over every 20-year period. Now, there have been some rolling 15-year periods where growth has outperformed. But the funny
But think
thing,
it through.
Yeah.
Yeah, go ahead.
Go ahead. No, you
well,
go
I was
ahead.
just going to say,
I want to
if you're
think it through.
buying stocks today,
Yeah.
do you want to buy the things that outperformed over the last decade or buy the ones that underperformed?
Oh, I am so glad you made me think that out. Wait, I choose the lower price one.
I was going to say you get the whole break to come up with your answer if you want, and you can use a lifeline if you need to.
Oh, did you watch that?
No, I did not.
You did not. Oh, I watched the miniseries Quiz on AMC, which is about the scandal on Who Wants to Be a Millionaire. It was really kind of cute. 855-935-TALK. Give us a call.
Tom and Don are talking real money.
At Vestry, we want to help everyone reach the best financial future. That's why we offer free meetings with our advisors with no obligation and no sales pitch. Set up yours today at Vestry.com or call 800-386-3004.
Your guides to a really great financial future. Tom and Don are talking real money.
One of these days we ought to charge money for people just to sit here and listen to us say stupid stuff during the breaks.
Oh, that's worth huge money, I'm
Yeah,
sure.
probably is. Hey,
I don't
everyone.
think so. My wife won't even listen. That's so sorry.
It was so funny.
She's out.
I got to tell you. Okay, let me give you the phone number, 855-935-TALK, 855-935-8255. Now, together, Tom and I have done 500, 600 Talking Real Money podcasts. Not all of them are up there because some of the early ones didn't
Is it
make
that many?
it, but it's a
I don't think
lot.
it's that many.
Well, yeah, because I remember for the past couple of years we've been doing dailies. So
Okay, because I just had a guy come in the office in
I think
January,
the official
so he
count
listened
is
to every
400.
one.
I think the official
Okay.
count is 4 something, the official count, but there's a bunch that didn't make it.
I felt very guilty when he told me he'd listened to every one of
Yeah.
them. I said,
Well-
wow, that's
And you would think
a lot.
You would think that my family would be interested in listening to them occasionally, correct?
Every once in a while, yeah.
So yesterday, my wife, we're sitting in the living room hanging out, and she goes, "Oh, I listened to your podcast." I said, "Finally."
Excuse me?
She goes,
Excuse
"Yeah,
me?
I listened to the one about Tom's mom." I said,
wasn't even you.
That wasn't even your husband.
That's funny.
That was
the one
Tom.
she hears.
She goes, it was really good. And I went, thanks. And have you listened to any of the ones I'm on? No.
Very busy.
I hear you enough.
She sent me a very kind and loving note from that, by the way. So it was very nice of Debbie to do that.
Oh, fine. Now my wife.
She always is.
Now
Debbie
she's
is,
listening to your podcast and flirting with you behind my podcast.
So call Don so you can feel better because you did that for me last week.
I did, you know, because he was stomping out of the room because nobody was calling him. 855-935-TALK is that number in case you forgot. Oh. And by the way, don't forget to listen to the podcast on your favorite podcast service because every week we take this show and we turn it into a podcast. And then we also do a couple of others. Over the next few weeks, it's only going to be 4 podcasts a week because Don's going to take his vacation in individual days. Because where can you go with COVID?
We can go to the national parks. Big write-up in the Wall Street Journal today about how the attendance is way up.
Yeah. Oh, great. I want to be around a bunch of other people.
Exactly. You can go going to the Sun Highway in Glacier National Park and be there with 50,000 of your closest friends.
Yeah. Don't want to. Thank you, though.
Yeah.
I mean, I don't even go into Chick-fil-A anymore.
I know. You drive through with a mask on, I think.
I do.
Yeah.
Well, because I don't want to make
you.
anybody sick or make me sick. 855-935-8255. We're talking a little bit about the way most people invest. And it's wrong. We tend to invest in what we say to ourselves are the hot stocks or the hot sectors. And we were talking about growth versus value. How over the past 14 years or so, at least 10, growth-oriented stocks like Apple, which has these rapidly rising earnings, have outperformed value stocks, which are companies with undervalued assets to their potential.
Well, and you got to be careful there. When we do this, we use a mathematical equation to determine because there's a lot of other people that say, oh, well, that's an obvious value. Boeing, that's an obvious value stock. It's had the worst Dow Jones industrial performance over the last year. We use a the academics we trust use a mathematical equation. And again, it doesn't mean
because we don't like math that much.
Trying to learn it. It doesn't mean that one's going to do better. I'm going to have to go back to algebra again here for my 7th grader. It doesn't mean that one's better than another. It just means one has created a greater return over a long period of time. That's it.
And there is actually I love this about all of these, what we call factors, these investment factors, like value tends to outperform growth over long periods of time or has tended to. We have to be careful about our tenses. Small company stocks have tended to outperform large company stocks. Why?
And
what?
Oh, I thought you were going to do the profitability thing.
Yeah, there's profitability too. But that one's too obvious.
Yeah.
Why have small company and value stocks outperformed? They're
riskier.
risky.
Yeah.
It's a duh thing. Oh, you take more risk, you make more money potentially. And then profitability. The more profitable a company is, the better their stock has done. Really? That shocks the heck out of me. Hey, you gotta call 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
Did you know I wrote a book? Yeah, about 10 years ago, I wrote a book about investing. Financial Physics, with an F, How Money and Investing Really Work. It's a short read. It's a really easy read because, well, as you know, investing is way too easy to be this complicated. And it's been on sale for a long time at Amazon. I updated it in 2018 to a new version. But if you don't want to buy it, you can go buy it at Amazon. It's $10. But if you don't want to buy it, if you want it free, well, you can get it free 2 ways. One, you can get a PDF copy by going to talkingrealmoney.com/free. talkingrealmoney.com/free. If you don't put in the /free, you can't find it. The other way is if you have an iDevice, like an iPhone or an iPad or a Mac, you can go get an interactive version of the book, a special edition that I made that's actually interactive, that's got videos and motion and things going on, and that's also free. Just look for Financial Physics, FYSICS in the Apple Bookstore or Apple Books or whatever they call it now. Or go to talkingrealmoney.com/free, talkingrealmoney.com/free. And I guarantee you'll enjoy the PDF or the iBook or your money back. Check it out, talkingrealmoney.com/free.
Reality radio for a really great future. We're talking real money.
Howdy, I'm Waylon, and he's a whining. Welcome to our little show. We're glad you could spend some time with us. All righty. Let me put that away because...
Oh, I was going to say, you're going to keep playing until somebody calls you? Is that the thing?
That is the punishment. That is the punishment. Right. If you don't call us at 855-935-TALK, Don will play the 5 chords that he knows. 5 chords.
I think I know 5 chords still from when I played the guitar 50 years ago.
Hey, I just started.
Good point.
This month.
Are you doing like one of those online courses or something?
Of course. What do you think? I'm going to hang out with some real person? No way.
I thought maybe Eric Clapton dropped by on weekends and helped you or something.
The last time I took guitar classes was when I lived in Colorado. It's a long time ago. I think my oldest daughter was in kindergarten. And the teacher I got, all I wanted to do was learn to play some chords and strum. And this guy was trying to teach me the lead guitar part to Dust in the Wind.
Dust
and I'm going,
wind.
I can't make everything move that way. But don't sing.
I thought you said it was in. I thought you said it was in Colorado. That's Kansas, isn't it?
Yeah.
Oh, sorry.
I knew something similar would be coming, but I didn't know exactly what.
But
hello again. Welcome to Talking Real Money. I'm Don. That's Tom.
Either the guitar or the bad jokes continue until you call. Yeah. Up to you. You make the call. Really.
And you should hear what his children have to say about his dad jokes.
Notice they're not here, nor do they listen to the podcast.
They don't listen to the podcast. 855-935-TALK. I'm Don. That's Tom. I hate the Dow. Tom hates the Dow. Everybody should hate the Dow. The Dow is dumb. The Dow, industrial average.
How they come up with the average.
It's an average. And that's what's important.
Literally.
It is literally an average, okay? I want to explain this to you. It is not an index like the S&P 500, which is the 500 largest companies in the United States by market capitalization, by value.
In other words, the number of shares outstanding times the share value, the actual size of the company, how big investors think the value should be. The Dow is none of that.
The Dow won. The companies are basically chosen by committee. There is no rhyme, no reason, no particular qualification. It's they go, I think this one fits better now.
And still, because of they don't like oil, they got rid of Exxon. They got rid of somebody else too. They got rid of 3, right?
I mean, can you believe they got rid of Exxon?
Exxon was the biggest company in the world, till
2 years ago.
2 years ago. Something recent.
Throw them out. So anyway, it's illogical right there to begin with. In fact, it's just this random bunch of...
I think that's the right word for it.
And it's not even very many stocks, folks. It's 30 stocks. Tom, about how many stocks are there in the world?
Well, that you could trade?
Yeah, you could tradable buy? Stocks. Tradable.
Like 12,000, 12,500, something like that.
A lot. More than 30, right?
Yeah. It's not a good indicator. No.
And then...
It gets most of the publicity.
And then, here's how they arrive at it. I alluded to this earlier. They take the price of one share of each of the stocks in the average. They add them all together, and then they take that number and they divide it by a number. In fact, in 1928, the number by which they divided was 16.67.
That makes total sense.
Sure does.
I'm on board with that.
Well, wait, though, because they have to adjust it for splits and dividends.
Oh, yes, of course.
So in 2019, the divisor was 0.147.
147.
It went from 16 to 0.5. No, point.
Yeah.
Less than.
Got it.
From 16 and a half to a half.
Point.
A point. 0.5.
Got it. Yeah.
Half
a one.
This is dumb. Do you know why they did it this way? Because they didn't have computers when the Dow was invented in 1896 by Charlie Dow. He had a adding machine, and he could add up the numbers and divide them.
how much money is invested in Dow index type funds? I guess that would be one question.
It's not an index.
I know.
Sorry.
How much money is invested in Dow 30? There's got to be a product, right?
No, I don't know.
I think there is.
All right, now you made me look.
Okay. Well, okay, because we know that most people's money in the United States is in the S&P 500. Most.
Yeah, we do know that. Because they're the 500 biggest companies.
Yeah, and the reason, by the way, the Dow reared its large D head recently is the fact that they're taking people out, putting people in. You're laughing. Go ahead.
Yeah, there is one ETF that invests in the Dow. One.
Okay.
One and only one. So, no, there's not a lot of money that's invested.
All right, get the guitar out. See how it goes.
855-935-TALK. Call. We'd love to try and help you deal with some of these confusing money issues like, why do people keep quoting the Dow?
Tom and Don are talking real money.
At Vestory, we want to help everyone reach the best financial future. That's why we offer free meetings with our advisors with no obligation and no sales pitch. Set up yours today at Vestory.com or call 800-386-3004.
For your real life and real future, Tom and Don are talking real money.
He's talking right until the show starts. It's just every time. 855.
I can deny that because
they
no one
heard you. They heard you.
I was showing you what a real guitar sounds like. That's all.
You have no real guitar.
No, that was a real guitar on the back end of the show.
Well, mine's an acoustic. That was an electric. 855-935-TALK is our phone number. Mine's a classical acoustic. It's not nylon strings. 855-935-8255. I got nylon strings because they don't hurt my fingers as much. Gosh, guitars are killer. As I said, there's only one Dow ETF, period. It's the Spider Dow ETF.
Yep, of course.
And I found a Dow mutual fund. You're going to love this one. Ready?
Give me the ticker. I got to get some money into that right away.
It's the Ridex Dow Jones Industrial Average Fund.
Of course, Ridex would have that product.
And
of course they would.
Now it's an average. It's the 30 stocks. That's all they own. They don't actively manage it or anything. What do you think Ridex charges every year to run that fund?
50 basis points.
1.68.
How much money is in that? It can't be much. That's a crazy number. People, please don't pay more than
$30 million.
Okay, it's tiny. I mean, don't pay more than
a half.
30 basis
30.
points. I mean,
20 on an index.
1 point. They're just that somebody even at 30 million, they're making a lot of money.
They really are.
That's kind of a lot of money.
I mean, honestly, that you just buy that mutual fund and it costs you more per year than it costs to hire most personalized investment advice providers for a fee and the cost of the portfolio. I mean, you
get someone to help you. You get someone to do the planning.
And it's a lot less expensive. I don't understand funds like this. 855-935-TALK is the number, and we do have people on the line, so no more Don Guitar. Tina, welcome to Talking Real Money.
Hi. I hope our connection is good because you've been coming and going as I've been listening.
That's Tom's fault.
I read about a tech stock, a tech company who has been in business since like the late 90s, and they developed a very successful product with their research and development, and apparently now it has been being used across the globe. They are now in the process of the R&D for a new application for the same industry, and they're trying to raise some funds for the R&D. They've raised $2 million of the $3 million that they're looking for, and I was considering, and I haven't done full research on the company yet, but just from what I heard, it sounded like, it was an upright company. That about taking some of my money from my Roth, so I wouldn't have to pay tax, and somehow figuring out how to purchase some of that $1 million
Tina?
that they
Tina?
are still looking for. Yeah.
Tina, are you interested in losing all of your money?
Well, I don't know. I'm trying to do some thoughtful thinking about it.
Well, no, but let's really. You need to think about this very carefully. Are you comfortable losing 100% of your investment?
If I put $20,000 to $30,000 into it, yes, I could do that.
Okay, because that's the only way I would ever suggest anybody take a flyer like that. But because the reality of a situation like that is that most companies with an idea in tech, particularly in this size of a company, asking for only a few $1 million, almost all of them fail. Only a tiny, tiny fraction succeed, and an even smaller fraction become wildly successful. So the risks are incredibly high. And I got to tell you, the risks are higher than you taking that $20,000 and going to Vegas and playing craps. You have a better chance of success playing blackjack or craps or even slot machines than you do finding success with a high-tech stock that's got an idea that is raising only $3 million. It just scares the living daylights out of me.
To believe that, too, is just look at what's happened to small business this year. Look at the number of small businesses that are going to go out of business. Good businesses that are going to go bye-bye in 2020.
I got to tell you,
I agree. Only if you're ready to lose all the money would I put anything. And
I don't believe in taking flyers with that kind of money. My personal comfort level for taking a flyer is probably $40, like right around there.
I'll call you next time we're looking for a new pizza
50.
oven.
That's it. That's as far as I would go. 855-935-TALK. Call anytime. And Bruce, it's your turn. Welcome to Talking Real Money.
Hi, guys. How you doing?
Good. Thanks.
Okay, good. So I wanted your opinion on the robo investment funds like Charles Schwab's Intelligent Portfolios.
I like them generally. I mean, they have one. Betterment has one. Acorns has one.
Wealthfront.
I mean, they're generally diversified. They're generally low cost, and I think for smaller amounts of money to get people started, they make sense. I guess the question always is, Bruce, do you get it? Do you get the asset are your assets being exposed to the things that we mentioned at the top of the show enough? In other words, enough small, enough value, enough international. That's where the rub is. And so when you get a little bit more money, I'd say maybe even look at another way to invest that includes those. But I think they do a very fine job. They reinvest. I mean, it's all automated. Don and I have talked about Acorns, I think, for 3 or 4 years.
Yeah, we've been actually generally big fans of them, unless somebody has some very specific needs that require a personal advisor, because what you don't get with these companies is your own personal, they're always there for you advisor. You get you get a machine, and it's a good machine. I'm not diminishing the value. But there's a place for these. There's a place for full service advisors. The only people for whom there's no place in the industry are commissioned brokers. I think there's no place. And
again, I'd say for smaller amounts, because generally when you have a smaller amount, you don't need personal help. Right. When you get closer to retirement, you do to make those decisions. And we already know this because of the Vanguard study. Most of the help that an advisor gives you is behavioral. They keep you from doing bad things to your money. That can be very painful when you're near or in retirement.
And that's one of the things that robos do not do well, is they do not keep you on track. If you decide you're with Betterment or you're with Schwab, you decide I like March. Oh, I'm too scared. I'm going to get out for a while. I'll get in when it feels better. They're not going to sit you down, metaphorically, and talk you down and keep you from doing what would have been an incredibly dumb thing. And it turned out it was an incredibly dumb thing. So we like them generally. There's always caveats for everything, for every part of the industry, but generally a good thing. Thanks, Bruce.
Good question.
Appreciate the call. 855-935-TALK. Oh, man, we're not going to make it. There's just no way.
That's it?
We can't carry
Saw
him
my
over
doctor,
the top.
We're not going to make it?
Well, we can't. I can't get another call in.
He heard the guitar and he said that's enough?
So what we're going to have to do is continue that over to the next hour or the next day's podcast for those of you listening to the podcast.
And is our next chat up online?
No.
No?
No.
It's not. Okay.
No, I forgot to do that. I was going to turn the on switch on, so don't mention it yet.
Okay.
But we'll have it.
Mum's the word.
Maybe I'll do it during the top of the hour. So wait a couple of minutes. I'll go switch it on. We've got a new class.
Those have been so popular.
Yeah, we're doing another encore edition of the new Science of Retirement Investing, and you'll be able to sign up for that in about 5 minutes or so at TalkingRealMoney.com. Just click on the events button.
Tom and Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm Vestory at 800-386-3004 or visit us at vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And as we speak, I am in the process of activating the next online class that we're doing coming up on, I think we're going to do it on the 16th. I've just decided that. I made an executive decision. We're going to do it on the 16th of September to give us a couple weeks to get folks signed up. And it's going to be free. And it's going to be easy, and it's going to be called The New Science of Retirement Investing, where we show you why we believe what we believe and how we think you ought to invest for a better future based on science, not emotions or hunches. So check it out in about 5 minutes at TalkingRealMoney.com. Click the events button.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?